A homeowner in Ontario was quoted $42 a month for $500,000 in term life insurance through an online platform. Their insurance broker returned a quote of $38 a month from a different insurer for the same coverage amount and term length, same health profile, same coverage need. The online platform had an answer in 15 minutes. The traditional application took 3 weeks. One option was faster, one option was cheaper. Neither was automatically better. The right choice depended on the applicant's underwriting profile and what they needed most: speed, price, flexibility, or advocacy. I've spent nearly a decade working inside the Canadian insurance industry. In this video, I'm going to review how online life insurance platforms work from an underwriting perspective, when they produce better outcomes than a broker, and when going through a broker is likely to get you better coverage or a lower rate. The choice between an online life insurance platform and a traditional broker-issued policy comes down to one question: how does your health profile fit the underwriting criteria each approach uses? Life insurance underwriting is different from home insurance underwriting, but the core logic is similar. Standard profiles can often move quickly, while complex profiles need more context. Online platforms use simplified or accelerated underwriting. They rely on questionnaires, data sources, and algorithms rather than medical exams for most standard applicants. That speed is real. Getting a quote in minutes and coverage in days is a genuine advantage. A broker submitting your application to multiple traditional insurers accesses fuller underwriting, more categories, more nuance around health history, and access to carriers who specialize in specific risk profiles. For straightforward applicants, that nuance rarely matters. For complex profiles, it can mean the difference between a standard rate, a rated policy, or a declined application. Online life insurance platforms produce their strongest results for applicants that underwriters consider standard risks. Standard means non-smoker, healthy BMI, no significant pre-existing conditions, no recent hospitalization, no high-risk occupation or activity, and a family history without major genetic health concerns. For this profile, most insurers across most channels will offer similar coverage at competitive rates. 3 situations where an online platform typically produces a competitive or better result. First, when you are young and healthy with a straightforward profile. Online platforms price standard risks competitively, and their simplified underwriting works well when there is nothing complex to evaluate. For a 30-year-old non-smoker with no health history, an online quote is likely to be fast, fair, and sufficient. Second, when speed matters. If you just bought a home, had a child, or want coverage in place quickly, an online platform may issue a policy within 48 to 72 hours for qualifying applicants. A traditional application with full underwriting typically takes 2 to 4 weeks. Third, when the coverage amount is in the standard range. Most online platforms offer straightforward term coverage up to $1 million to $2 million without a medical exam for qualifying applicants. For most Canadian homeowners, that range covers the core need. Brokers and traditional insurers produce their best results when your profile requires advocacy or context that an algorithm cannot capture. 3 situations where a broker typically produces a better result. First, if you have a complex health history. A history of a managed condition, controlled diabetes, past cancer, a heart condition, sleep apnea, or other factors may result in a rated policy or a decline from an online platform's simplified underwriting. A broker can submit your application to multiple traditional insurers simultaneously and present context around your health history that an online form cannot. Some insurers specialize in exactly those profiles. Second, if your coverage needs are large or complex. Coverage above $2 million typically requires full medical underwriting, regardless of the channel. A broker navigating multiple carriers may find better terms for a large policy than an online platform's fixed product offerings. Third, if you need more than term life insurance, online platforms primarily offer term coverage. If you need whole life, universal life, or a combination of products for estate planning or business purposes, a broker has access to a wider product range than most online platforms offer. I would use both. The same principle that applies to home insurance comparison applies here. Get an online quote first. It costs nothing, takes 15 minutes, and gives you a market rate baseline for standard term coverage. Write down the monthly premium, the coverage amount, and the term length. Then take that quote to a broker. Tell them what the platform offered and ask whether they can match it, improve on it for your specific health profile, or explain why a different structure might serve you better. If the broker can match or beat the online quote and your health profile is straightforward, compare the policy terms carefully before deciding. If the online platform's quote is competitive and the policy terms are equivalent, the platform may be the faster and equally valid choice. The goal is not to pick the channel. The goal is to get the right coverage at the right price for your specific profile. Using both gives you more information than either provides alone. Here is the reframe. The choice between an online platform and a broker is not a values question. It is an underwriting question. For standard health profiles looking for term coverage in the standard range, online platforms offer speed, simplicity, and competitive pricing. For complex health histories, large coverage amounts, or non-term products, a broker's access to full underwriting and multiple carriers is worth the additional time. The homeowners who get the best life insurance outcomes are not the ones who reflexively choose one channel over the other. They are the ones who check both and make the decision based on their actual profile and coverage needs. 3 questions to answer before choosing your approach. Question 1. Is my health profile standard? Standard means non-smoker. No significant pre-existing conditions, healthy BMI, no high-risk activity. If yes, an online platform is likely to produce a competitive quote. If no, start with a broker. Question 2. How much coverage do I need? For standard term coverage up to $1 million to $2 million, online platforms work well for qualifying applicants. For larger amounts or complex product structures, a broker's access to fuller underwriting is likely worth the additional time. Question 3. Do I know my market rate? If you have not run an online quote recently, you do not know what the market is offering for your profile. Run the quote first. It costs nothing and takes 15 minutes. Whatever it returns, bring that number to your next broker conversation. An online life insurance platform and a traditional broker are not competing options. They are different tools that work best for different profiles and coverage needs. Using both gives you more information than either provides alone. For standard profiles seeking term coverage, an online platform offers speed and competitive pricing without a medical exam. For complex profiles, larger coverage amounts, or non-term needs, a broker's underwriting access and carrier relationships are worth more than any algorithm. The free homeowner checklist is in the description. It is focused on home insurance, but the same principle applies to life insurance. Know your coverage need, compare your options, and bring the quote into your next broker conversation. If you found this useful, subscribe. I publish one of these every week. Everything I cover comes from nearly a decade working inside the Canadian insurance industry. See you next week.